So let's move away now, navigating the landscape. Wow. In today's world, the financial environment, banks are also in a pressure to keep the pace with the rapid changes on the market and, of course, the business dynamics. The next covering session will, of course, explore the key driver or the element behind the modern treasury solutions. Now, the treasury functions have evolved beyond the traditional scope of cash and liquidity management. Let us now put light on the next topic navigating the landscape, how banks can actually embrace the future of treasury. Calling upon Mr. Prasad Rao, lead solution consultant, treasury and capital market Finastra, to join us on stage for a very insightful session. Can we have a huge round of applause? Come on.
We have a few short minutes now to talk about technology and the future of Treasury in the context of evolving technology trends. Finastra is a software company, so of course, we have a slight bias. We understand the world of banking, we understand the world of innovation in banking through the filter of technology. And in many ways, we believe banks are best understood as a wrapper around the technology that they use. Banking products and services need software. They need software to enable meeting your customers wherever they are located, in remote areas of India, in metros, whichever age demographic you're looking at. You need software to identify the workflows for the for the services that you're going to be offering these customers. You need software to monitor the health of your business, to understand whether you're making a profit or not. And in many, many ways, capability of the software architecture that you deploy is the capability of the bank. But technology is undergoing a rapid transformation. It's going through a rapid transformation a few times in the last few decades, but this one seems to have many downstream impacts on the banking industry. Always, new technologies enable new capabilities for banks, and they enable a whole host of new challenges in the banking industry. So today, I want to look at the shape of some of these technology trends and how traditional banks can take advantage of these trends. I'm going to take up three themes that we hear about over and over again in this space. The first is, of course, generative AI. It's the topic of the year, maybe about the last 1.5 years now. And it has impact on enterprise solutions, it's not just chatbots, it has impact on enterprise solutions. So we'll discuss some of that. We'll discuss agile technologies and continuous integration as tools that banks need to adopt to be able to develop new products and new capabilities in future. And of course, we will look at the often extremely critical role that technology plays in ensuring that you're compliant, that you're able to monitor your operational risk and the limits that your trading activities are going to be undertaking. Before we start, um, I want to also be careful to localize these conversations. Often we have these conversations in a purely global sense, and that has limitations. In India, we have unique necessities. There is an intense focus that we have in India towards cost and scale. And that's not true in every single major economy. Every economy, of course, has its own necessities. India has its own. Our product innovations must work in the playground that is created by our history and the regulations that are the product of our history and our backgrounds. Take the classic example of UPI. Everyone in the world wants faster processing of payments. But in India, we have an intense focus on cost and scale of operations. This focus in India is combined with unique capabilities in deploying software architecture, large-scale software architecture in particular. Thus, UPI. This is an example of a centralized and regulator-led approach to innovation. But RBI is not only doing UPI. RBI is also generating innovation in many other aspects of the banking industry, including in the treasury world. One classic example of RBI-led innovation is, of course, CCIL. CCIL started with trade repository reporting, as we all know, settlement operations. That's what they were supposed to do. It's in the name, CCIL, Clearing Corporation. But today, they have subsidiary NDS and they provide execution venues, and more of our trading activities in the treasury world is moving into RBI and CCI-led trading venues. NDS provides execution venues for G-SECs. They provide execution venues for overnight call, interest rate swaps. And now, increasingly with FX retail, they are trying to get retail FX trades also onto a centralized platform. At least the reporting of it, it's not execution. I'm sure we will have discussions on that, whether true execution will move on to those platforms. But there is an attempt at innovation from the central bank, similar to those attempts in other places of the financial industry. So when we discuss innovation in technology, we must understand these global dynamics that are happening, that are shaping these technology trends. But we must also be careful to localize these conversations. Let's begin with generative AI. This technology has the potential to redefine how we approach enterprise solutions. So what does generative AI do? It's moving our capability further in a few very interesting areas. I'll take a couple of examples of how this happens. One example is Goldman Sachs. They've been experimenting with generative AI tools for some time now. And in one of their projects, Goldman Sachs developers are using AI to generate code and documentation. I think said Nakul was alluding to some of that. And some of these dynamics are happening in India as well. So yes, reconciling BO, reconciling operational data, yeah, particularly in the back office, and IT optimization, yes. Goldman Sachs have found, however, few metrics, and they are very interesting. What they are finding is that AI does not replace the developer so much as complement the developer. They're finding that deployed correctly, Gen AI is able to provide 40% of the developer's code. Essentially, in another way of looking at it, this has the potential that Gen AI enables every business user to have a developer at their beck and call. This is not a very competent developer. This is not a developer who is going to do miracles for you, but it's a developer that can generate proof of concepts for you. And those proof of concepts move the conversation with your IT teams much further ahead, much faster than it would have been without. This is an innovation that's not possible without the world of Gen AI. But Gen AI, of course, has also had an impact on search, on data search. In Condor, we hooked up an LLM to the Condor database. Allows the Condor user to type in a query. We had a panel discussion, and that was one of the topics that came up as we haven't seen a lot of success, but we have implemented this, at least at proof of concept level, and Condor users are able to type in a chat window and search the Condor database to get the relevant data that they need. Honestly, this is magic. I remember a world where getting the data meant you try to remember a report name and often misremember a report name and try to work out the manual steps to ensure that that report actually runs and gets you the data that you require. This is magic. Type in a chat window and the Gen AI tool does that for you. If you see treasury management as the effective management of a bank's cash flow, liquidity, and investments, if you look at that core functionality that is required of a treasury operation, virtually every aspect of this treasury operation is going to be impacted by Gen AI. Let's look at a few examples. How does Gen AI impact forecasting and liquidity planning? In a very classic world, this is an area where the treasury needs to bring in a whole host of data sources. some internal, some external. And this is an area where banks tend to find it difficult. They find it difficult to complete automation of the last mile, the last integration setup that needs to be done to stitch all of these data sources together. The net result, you have reconciliations, you have a lot of activities that remain manual. Although we have, in theory, automated most of this work, we end up in practice doing a lot of manual activities. For example, Rajiv was mentioning about how he did the implementation of migrating to meet RBI regulations. Yes, there is automation that has happened, but it has never been fully complete. Now, Gen AI provides the ability for us to write these integration scripts faster, to iterate faster. And this allows the bank to adapt more quickly to the evolution of their data sources. Our data sources is never going to be just static as this is the set of data sources that we have established today during a BRD, and that's going to continue for the life of the organization. That's not practically how any of our organizations work. We know that the data sources are going to evolve. We need to be flexible, we need to be adaptable, and Gen AI is a tool that makes that flexibility and adaptability available to almost every business user at their fingertips. Managing risk is another crucial activity in treasury operations. And again, panel discussed that. We have some examples of Gen AI already able to simulate market conditions, to stress test your portfolio, to offer suggestions for how to improve. I think Alok mentioned trading optimization on the Bloomberg screen. That's one way in which you could look at Gen AI as a way in which it's going to improve your outcomes. But treasury decisions involve many complex variables. Of course, it involves market variables like currency fluctuations, interest rate movements, but often the trader requires an intelligent advisor as well. It requires an advisor which can generate scenarios, reasonable scenarios, not just scenarios like Monte Carlo simulations, but reasonable scenarios, and propose how to test these scenarios and identify outcomes that decision makers should be considering before they take an active trading decision. So Gen AI helps you generate portfolio optimization strategies that move the conversation ahead, that move the capability of that trader ahead. Often we talk about traders alpha. Gen AI potentially has the capability of moving the traders alpha a little bit further. Do that at industrial scale across the financial industry. You're looking at a revolution. Another area where trading platforms tend to have stress is generating reports, particularly compliance reports, and automating the process of generating these reports, automating the process of limits management, validations. Gen AI streamlines regulatory compliance potentially by automating these batch scripts, automating these end-of-day tasks, automating the reconciliations that are needed to be performed as a regular daily BAU activity. By providing a lower cost resource, Gen AI has the potential to reduce human error and ensure that banks stay compliant. Gen AI is a revolution. As this technology matures, it will be critical for enterprises to figure out how you're going to leverage it. But that's not it. That's not all. Technology is changing, and it's changing drastically today in many ways, in many areas. Let's look at one more area. Agile development, agile methodologies. Traditionally, financial institutions operated in a waterfall kind of model. So projects would go through a fixed price, fixed scope, development process, and it would take months, sometimes years, to realize the gains that we contracted, we signed for. Literally years, sometimes. But we've been talking about agile methodologies in the software world for some time. With CI/CD, these agile technologies are now more capable And organizations are able to iterate faster, release more frequently, and adapt to market changes more effectively. Coupled with CI/CD, agile methodologies allow a world of change to the bank's IT department. Where is this most valuable? Where does a capability to iterate faster, to adapt faster, have the most impact? Obviously, compared to most of the bank's functions, Treasury is the one place where responsiveness to market changes and customer demands is going to have the most critical impact. With agile methodologies, teams work in sprints. They'll iterate quickly on features and adjust direction based on real-time user feedback. Take a new business that the bank wants to offer. In a traditional model, the bank has to go through an entire cycle of specification, development, user testing, integration, testing again, before they're able to see the first benefit, the first activity go through that entire cycle that they specified or that they contracted to buy a year back, maybe 2 years back. Eventually, most banks end up doing a soft launch for their new products with primarily manual operations. They wait for the software to catch up so that they can start actually offering those services in the mass market. Agile methodologies offer a fundamental rethink for you. Some smaller teams can be built now to focus on what's important to you, the bank, in deploying a new product or a new service. You don't need extensive development effort right at the front end. Instead, you have immediate core deployments, and then typically the backend integrations, regulatory reporting support that needs to happen that can follow. They can be built up over time as operations evolve, as operations mature, as we understand what are the dynamics of each of these new products. The bank is able to use their core systems quicker, iterate faster on all of these business capabilities they are looking to deploy. These agile methodologies require a rethink in how the banks operate these projects and how the banks buy these projects from their vendors. Project plans need to be flexible and evolve as we discover our needs and priorities, not fixed in time. Sometimes this is contrary to the typical buying process that banks follow, which is, of course, fixed price projects. But if your intention is to be flexible on the business side and evolve as market demands evolve, you need to build flexible IT muscles as well. You cannot sprint to that evolving market without flexible muscles. And those muscles are going to be built of IT. Of course, it's not enough to be simply agile on building a specification. That's the easy part. Just have a sprint team and you can build some agile Jira, Confluence pages, and we've all been there. We've all, in the treasury world, seen the impact of that, which is probably very marginal. But coupled with agile, if we include CI/CD to automate the deployment of what we develop, we have enabled frequent, reliable release management of the software that we are developing. Then treasury management systems that typically become complex over time as integrations develop further, multiple databases start developing, regulatory bodies start investigating those databases. CI/CD ensures that each of these changes are built and integrated seamlessly without disrupting daily operations. In the world of treasury management systems, Condor has adopted CI/CD frameworks for many, many years now. And many of our customers have stopped doing costly upgrade cycles once every 5 to 10 years. Instead, on Condor, they deploy patches and they stay current on their version. And this requires an upfront investment on their side, but the benefits far outweigh those costs. The benefits are in terms of much larger cost savings down the line as your business evolves faster, quicker, adapts better, your businesses are able to evolve better, and your costs are much more predictable and spread out over time. The obvious cost saving, of course, is real-time upgrades. You don't have long projects that are disruptive to your business and disruptive to your systems. The CI/CD model offers the bank chance to keep up-to-date solutions. This could mean integrating with new market data sources, implementing the latest regulatory changes, not just agile specifications, but agile deployments. Your software platform can stay up to date with the latest version, and that allows you to leverage the latest technologies, for example, GenAI. An important advantage that CI/CD provide is, of course, their emphasis on security and reliance as well. Security patches are deployed quickly, and code quality is monitored constantly. Coupled with API integrations, CI/CD allows banks a chance to rethink how you deploy solutions and rethink what you can do in the banking space. And as GenAI makes more competition viable for banks, banks must adopt these technologies to figure out how they're going to stay current and relevant to their target audience. I hope that was interesting. I hope I showed the same enthusiasm the lady was giving us. But please talk to us further if you need to hear more on this. Thank you so much.
Well, thank you so much for an absolutely constructive and highlighting on the key points. Thank you so much for letting us know the opportunity, at the same time challenges. I'll call upon Mr. Soumya Biswas, Director, Synex Business Media Private Limited, to do the honors of felicitating Prasad Rao, Lead Solution Consultant, Treasury and Capital Market, Finastra.